If you're saving up to buy a new car, take a vacation or make other big-ticket purchases, it makes sense to hold onto your cash so you have something to pay with when the time comes. Unfortunately, these days cash isn't earning much interest, meaning you won't see much growth in your savings. It's important to know that there are other options besides cash that can help your money grow and make you more financially secure down the road. Here are 12 types of assets that offer better performance than cash investments right now. 1. Certificates of deposit. Certificates of deposit, CDs, are one option when it comes to investing your money. They offer a fixed interest rate that you receive at the end of the term, which is typically between 3 months and 5 years. CDs are Federal Deposit Insurance Corporation, F.D.I.C, insured up to $250,000 per individual, and that makes them a low-risk investment. You can also find CDs with higher rates if you're willing to take on more risk. CDs make an excellent choice for those who don't want to worry about fluctuations in the market or being forced into selling stocks or funds before they want to. You can open a CD at most banks, credit unions, and brokerage firms for both personal and business use. 2. Government bonds. Government bonds are a type of fixed income investment. They typically offer higher returns than cash equivalents, such as certificates of deposit and money market accounts. However, they also carry more risk, because their value can fluctuate over time with changes in interest rates and economic conditions. The U.S. government issues treasury bonds for a minimum investment amount of $100, but you'll need to be an accredited investor, with a net worth exceeding $1 million or an income exceeding $200,000, in order to purchase them without incurring fees from the government. 3. Municipal bonds. Municipal bonds are a type of bond issued by state and local governments to fund government projects. The income from municipal bonds is exempt from federal taxes and in some cases, state taxes. They can be a great way to diversify your portfolio since they are less volatile than stocks. Municipal bonds are popular for their tax advantages, but the other big advantage is that you don't need to worry about the bond issuer defaulting on the loan, like with corporate or sovereign bonds. This makes them a safer investment, which means that you're more likely to get your money back, even if it takes a while. The downside is that you also won't make as much money as with other types of investments. 4. Business equity. The most common type of equity is stock. Companies have the option to either IPO on a public exchange or stay private, but in both cases, there are shareholders and an ownership stake. The higher up you go in the company and more shares you own, the more money you will make if the company is successful. You can also invest in startups through venture capital or angel funding, which are options for getting equity without having to take on all the risk yourself. You can also get business equity by buying out someone else's share, known as an MBO. This usually happens when a partner wants out and sells their shares to another party with cash or another asset, like property. 5. Real estate. Real estate is one of the best options for building long-term wealth and can provide a steady stream of income. Real estate has outperformed inflation and stocks on average over the last 100 years, making it a great option for people looking to diversify their portfolio. Real estate is also an excellent asset for people who want to retire early. The rental income from property can be enough to cover your living expenses in retirement, meaning that you might not need to withdraw any money from your retirement account. 6. Small businesses. A small business needs resources to grow and prosper, and cash is a common resource. But there are plenty of other assets that can help your business become successful, so don't count out anything. 7. Coins and stamps. One category that is often overlooked is coins and stamps. The price of a coin or stamp can change with the market, but there are a few caveats to consider before investing. For instance, collectors will pay more for coins that are rarer and in better condition. This can be an advantage because it prevents you from having to evaluate the coin's worth every time you plan to sell it. However, coins may not be as liquid as cash if you need money quickly. Gold may also be a good option for investors who want protection against inflation. However, gold comes with its own risks because it trades on volatile global markets. 8. Bullion. Bullion is one type of asset that outperforms cash in terms of long-term value and stability. Generally, bullion is a tangible asset with intrinsic worth that cannot be duplicated by fiat currency. Bullion comes in many forms such as coins, bars, and rounds, smaller than a bar, but it all represents the same thing: a store of value that doesn't rely on paper money to have any value. Unlike paper money, bullion has intrinsic worth and cannot be created out of thin air. This means bullion will always have greater long-term value than fiat currency because it is finite in supply. 9. Precious metals. The precious metals market is one of the most volatile markets in the world. The prices can fluctuate wildly due to a number of factors, including but not limited to supply, demand, investor sentiment, and geopolitical events. That being said, as an investment class that has been around for centuries, precious metals are considered by many to be one of the most stable investments available. When considering investing in gold or silver, it's important to know where you buy from. It's possible to invest in a company that produces physical metals such as Goldcorp, Agnico Eagle Mines Limited, or Hecla Mining Company. Alternatively, investors may purchase shares of companies such as Golden Star Resources Limited, which mines gold exclusively for its shareholders, Silver Wheaton Corp., which invests 100% of its capital into silver projects, or Royal Gold, which specializes solely in physical gold ownership with exposure primarily to US-based mines. 10. Money market funds. Investors can invest their money into these funds where the risks vary depending on how liquid the fund is. The returns generated depend on interest rates plus fluctuations in the stock market. 11. Copyrights. Like patents, copyright protects intellectual property and ideas from being used by someone else without permission from the owner. 12. Patents. Patents protect inventions and ideas, which can be worth billions in profit if executed properly. Which asset would you invest in? Comment below, and don't forget to like and subscribe to Investor Web.